Well, hello and welcome to another video by Financial Ernie. On today's video, we're going to be talking about Bluebird Corporation. That's right, it's a school bus company. We're going to go over their latest earnings report that just came out November 25th. So without further ado, let's get right into it. All right, let's get right into their financials. So starting with the number of units sold, they sold 9,000 buses in 2024 compared to 8,514 buses in fiscal year 23. Next is going to be net sales. They had an increase in net sales. They are up to $1.347 billion in fiscal year 24. That is an increase of $214 million compared to fiscal year 23. Their adjusted EBITDA is sitting at $183 million. That is an increase of $95 million compared to fiscal year 23. And lastly, their adjusted free cash flow sitting in at $99 million. That is a reduction by $22 million from fiscal year 23. We'll talk about what some of that spending was for as we continue on through these slides. But before I move on, let's talk about some of these business highlights. Starting with their backlog of units. So their forecasted sales for fiscal year 25 and beyond. They have a strong $735 million worth of sales backlog. Also, they have alternate power sales mix of about 58%. So that's anything from propane to electric vehicles compared to the standard diesel products. So they do have a nice mix there, which should help them when it comes to some of these green incentives. They'll talk a little bit about that throughout this presentation. So let's just go ahead and continue on. A couple other things. Their average bus selling price went up by 14% year over year. So they are seeing the ability to be able to increase that margin by having a slight increase in the cost of each sale, or I should say the price of each sale. Their parts sales department, they had an increase. They made $104 million this past year. That is a 6% year over year increase. Looking at their bookings, this is a little bit kind of like that backlog. They have a strong EV bookings of an additional 29% year over year. So as more and more of these public schools, as more and more of these government entities decide to go ahead and go green, they are seeing an increase in purchases, in backlog of these EV sales. So coupling along with that EV backlog at 29% increase year over year, they have a $200 million EV backlog heading into fiscal year 25. A couple other important items to note on this slide. They did sign a contract with the USW. So they are going to have some union steelworkers working to help manufacture these buses. So that is a good opportunity to have a stable workforce and help out when it comes to getting certain incentives for having union workers. A couple other things that are worth noting here on this slide, you'll notice they actually were selected for an $80 million grant from the Department of Energy. And lastly, they did beat their 2024 guidance for revenue, for adjusted EBITDA, and for their adjusted free cash flow. So they had a stellar fiscal year 24. And let's go ahead and continue on. All right, let's zoom in a little bit. Let's look at just this Q4 of fiscal year 24. They had a total of 2,466 units sold. That is an increase of an additional 350 units compared to fiscal year 23, same quarter. Their net sales, they had $350 million. Again, this is an increase from the same quarter, fiscal year 23, of $47 million. And their adjusted EBITDA sitting at $41 million for fiscal year 24 Q4 compared to fiscal year 23. This was an increase of $1 million on their adjusted EBITDA. And adjusted free cash flow ending this Q4 is at $50 million. This is still an increase of $15 million compared to fiscal year 23 Q4. We've already talked about the full year breakdown, but if you'd like to pause and just kind of recap that, please feel free. All right, let's take a closer look at this fourth quarter income statement. We already talked a little bit about the units. Let's go ahead and look at some of the other items here. So look at their backlog in Q4. They're sitting at 4,846 compared to fiscal year 23 Q4 at 4,559. So an increase of 287 units in their steady stream of backlog. Looking at their gross margin, jumping down there, you can see they have a 17% gross margin for Q4 24 compared to Q4 23 at 16.5%. So a small uptick on their gross margin percentage. As far as net income goes, again, they're up. They're at 25.8 million compared to 21.3 million for the same quarter in 23. Their adjusted EBITDA, again, 41.3 compared to 40.7. So another increase there. And then their adjusted diluted EPS sitting at 77 cents compared to fiscal year 23 at 66 cents. So an increase on their diluted EPS. So all in all, this was a very strong quarter for Bird Corp. And we're going to go ahead and continue on and look at some of their additional highlights. And looking at their full year income statement, let's just jump straight down to gross margin. They're sitting at 19% compared to fiscal year 23 at 12.3%. So again, an uptick in their gross margin percent. You can see their diluted earnings per share sitting at $3.46 compared to fiscal year 23 at $1.07. So they do have some strong growth compared to fiscal year 23. But let's go ahead and continue through. Let's look at their fiscal year 23 to 24 walk. So this is going to be their EBITDA walk, starting at fiscal year 23 and then going into 24. Here is actually what made that 95 million year over year improvement. So starting with pricing and product mix, they had a positive variance of 120 million. Next is going to be their plant and labor overhead costs. They actually had a negative $7 million. So as they are increasing sales, they will have to increase some of that overhead costs. They potentially are working some of that overtime to make those units. That is understandable in the manufacturing industry. Next is going to be higher revenue and margins. They had a plus 5 million for that. Their Microbird JV, so their joint venture, they had a positive $6 million for that. And then their SG&A and engineering, so they did have some R&D. They did have some of their normal administrative fees. Those did increase as well by 28 million, so that would be a negative variance. And looking at fiscal year 23, 88 million compared to fiscal year 24 at 183 million, that is that 95 million positive year over year increase on their adjusted EBITDA. All right, now let's take a look at their balance sheet and cash flow summary. Starting with cash, they have 127.7 million for fiscal year 24 compared to 79 million in 23. From a debt situation, they did reduce their overall debt. They only have 95 million debt compared to fiscal year 23 at 130 million debt. Liquidity, they have $271 million compared to fiscal year 23 at 163. Operating cash flow sitting in at 111 million compared to fiscal year 23 at 119 million. So a slight reduction in their operating cash flow. Looking at that adjusted free cash flow, I talked about this earlier, they're sitting at 98.9 million compared to fiscal year 23 at 121.1 million. And then their trade working capital. They are at a negative 32.4 on their working capital compared to fiscal year 23 at 36.4. So one final thing on this slide, I wanted to highlight their statement at the bottom there. It says strong operating cash flow drives adjusted free cash flow and record levels of liquidity. And looking over their fiscal year 25 guidance, this is one of the most important slides as an investor to kind of see what should be expected over the course of this next year if you are investing long on a company such as Bluebird. So a couple of the improvements. So this would be the tailwinds. They say they have strong demand, stable gross margins, propane exclusive, meaning they don't have any competition for that specific fuel type for these school buses. And then their EV growth, 2/3 in the second half of fiscal year 25. So that is going to be some very, very positive outlook for Bird Corp. So let's look at some of the headwinds. So these are potential issues that they have to be able to compensate for, and they have to be able to make some very smart decisions in fiscal year 25. Starting with supply chain. So they have to ensure that they have a strong supply chain. That is something that they have to start looking at their ordering, making sure they're getting the information or getting their product at a good lead time. So they may want to hedge their bets a little bit to ensure they don't have any kind of supply chain issues that slows down their manufacturing capabilities. Next is going to be labor costs. So again, with the United Steelworkers, they are going to have a slight increase in their pay, which is going to be an increase in their overhead cost. So it's going to be important that they're able to leverage these workers and really make them earn that additional wages in the form of productivity. Next is going to be material costs. Again, That's something that they're going to have to work through if they start to see any increase in the cost of steel or any of their other raw components that they are using to manufacture these vehicles. They're going to need to be strategic in how they can negotiate, whether it be volume orders or things of that nature, in order to keep that material cost as is or slightly lower. Next is going to be the EV timing. So again, they mentioned for the 2/3 of the second half of the fiscal year 25 would be strong. This first third of fiscal year 25 is going to be a little bit slow for the EV production. And there's a little bit of uncertainty in some of these orders. They're going to have to ensure that the timing of these orders come in quarter over quarter so it doesn't impact their overall earnings statement, their balance sheets. So we talked a little bit about their tailwinds and their headwinds, but let's look at some of these metrics here in the center. So you can see the worst case, best case, and then about the average case they're expecting for fiscal year 25. So at worst case on a supply chain number of units, they're sitting at 9,000. That is what they were able to manufacture in fiscal year 24. So that's worst case scenario. They're expecting with their new guidance to be at 9,250 with a potential upside up to 9,500 vehicles. So again, as I mentioned with the United Steelworkers and the productivity, ensuring, I heard them on their earnings call mention the word Kaizen multiple times. So they are definitely looking at lean manufacturing in order to be able to reduce their takt times and to be able to increase the number of units sold each month or manufactured each month. Next is going to be the total EV units. So the downside worst case scenario is 1,000 EV units, but their guidance is saying 1,150 and the potential upside up to 1,300. Revenue. Sitting at 1.4 billion as the worst case scenario they're projecting, but their new guidance has them coming in at 1.45 billion with a potential upside at 1.5 billion. And then their adjusted EBITDA at 190 million is the worst case, mid-range at 200, which is their new guidance, and potential upside at 210 million. Last is just that adjusted EBITDA in percentage. So 13.6 downside, 13.8 is the new forecast, and 14% is the potential upside on their adjusted EBITDA. So these are all very good, very positive improvements on their guidance for fiscal year 25. This shows a very strong revenue cycle, shows a very strong backlog in terms of sales, and shows an increase in their EV production. And we're going to talk a little bit about some of those EV incentives on a future slide. All right, and as I mentioned about EV, let's go ahead and take a look at this $80 million grant that the Department of Energy provided Bluebird and what they are doing with that additional money. So they did actually purchase a new 600,000 square foot EV production facility there in Fort Valley, Georgia. Total investment was 160 million. So they were able to spend just a little bit less than half of their own money. They're able to use this grant money for the rest of this facility. So that's excellent. And if you look at their debt, they had a decrease in debt. So it looks like they were pretty smart as far as how they managed this CapEx. And as it says right here, about 50% was funded by Bluebird. Their build out, they're expecting this to be done in 2 years. They're going to be able to start manufacturing additional vehicles from this location. Looking at their CapEx impact. So they're looking at their free cash flow their spend is going to be increased by about 50 million. Looking at the total capacity, just one shift at this new facility is going to get them an increase of about 14,000 buses per year. And again, this just mentions that this does provide them additional capacity for some of their commercial chassis. And it also provides about 400 new jobs for some manufacturing industrial workers there in the state of Georgia. And that's about a $10 million in community benefits. So there's a lot of really good things that they're able to do with this money. And this is, of course, why the government has these types of grants, is to be able to invest back into the community and provide jobs for various workers. Two more things to talk about really is going to be this project IRR. So this is, I believe this is their return on investment, sitting at about 28%. They're expected to have it paid back in 2 years after the launch. And the DOE negotiations are supposed to be over by the end of this calendar year, 2024. All right, and the finance guy's favorite slide, we're going to talk about their free cash flow and their operating cash and their growth strategy behind using those dollar bills. So first off is going to be revenue. So again, they mentioned their net revenue guidance coming in at 1.45 billion. This is due to their organic growth with focus on their alternative fuel vehicles. They're not chasing the market share. Instead, they're re-engaging in large fleets. So they're going back to some of their repeat customers that may have some aging vehicles and looking for opportunity to basically provide them with the latest model or potentially one of these alternate fuel type vehicles. With the government having various incentives, this is a great opportunity for Bluebird to capitalize with their existing customers. And then expanding with commercial chassis and their microbird, that's their joint venture. So again, they're able to utilize this revenue to expand those two categories as well in their portfolio. Looking at profit, again, they're expecting an adjusted EBITDA at $200 million profit. This is based on their disciplined pricing. So they do typically twice a year have some incremental increases in the price of their buses. This is by no means outside of the ordinary for this industry. And this is able to help them continue to increase their profit margins overall, as well as, if you think about it, increase that overhead costs. Those workers are expecting annual salary increases. So this is another opportunity that they're able to retain their really efficient workers, as well as not have to necessarily eat that on the bottom line. So looking into that, that is about a $3,500 per bus in October of 24. That is that increase in pricing. And as was mentioned on the earnings call, the other increase in pricing usually comes in around April time period. And then they're managing their current backlog. They have enough for about 2 quarters. So their sales department is going to continue working with existing customers and reaching out to some newer customers just to ensure that they continue to have a nice solid backlog of at least 2 quarters. And then the last item, this is something that means a lot to me. I am in the manufacturing industry myself, but they do have a good focus on their continuous cost improvement as well as their lean manufacturing, all on one shift. So again, if they needed to increase their capacity because they had a very strong demand, maybe some additional market share dropped in their lap, they have 2 additional shifts at their current manufacturing facility. They would be able to scale up their workforce to be able to handle that increased demand. And with the United Steelworkers Union, they actually have the opportunity to kind of discuss those, negotiate those, second, third shift opportunities. Again, this is just my opinion when I look at this specific bullet line. So I mentioned this a little bit earlier on in the presentation, but when it comes to their material costs being a headwind, one of the ways they're able to strategically combat that is by forward buying it in order to de-risk any kind of impact on their gross margins. And then let's talk about their cash. So again, they're planned on using $80 million as an investment for that new facility there in Georgia. And they plan to have that paid back within 2 years of operations there. And lastly, their stock buyback program. This was an approved buyback at $60 million. They've already purchased $10 million worth of stock, and they have plans to purchase an additional $50 million back. If you do look over their earnings reports, you will notice their overall Class A common shares, and I don't really see that large of an increase quarter over quarter, year over year. I believe it may have been sitting around 200,000 total share increase. And if you think about it, some of that has to do with some of their share compensation programs there for their different workers. But overall, compared to some other companies, that is a rather low amount of additional dilution going into the overall common share count. So I think that's a very positive thing that this company is doing. They're utilizing their unit sales and their profit margins to continue to make their company a success. And now they're looking to provide some returns for their investors in the form of share buybacks. And one thing else I wanted to mention, this has to do with some of those government grants, some of those additional subsidized programs. Bluebird does feel that they are poised to have about a 30% market share, if you will, of these specific types of federal funding initiatives for these EV buses. So with that said, if you look over their various, whether it be grant programs, rebate programs, or just vehicle programs in general, they just announced a brand new program for this Inflation Reduction Act for an estimated $650 million for school buses, and the anticipated award is December of 2024. So we talked about that on a previous slide. So again, if Bluebird is able to win a significant contract for that amount of funding, again, that's going to help increase their backlog, their pipeline there. And I believe based on all of these government programs, this is why they feel that they will have a strong 2/3 of the second half of fiscal year 25 in terms of EV sales. And one last thing about the EV industry, about these government grants and different government programs, Bluebird did highlight some additional items here. So again, they are confident in maintaining federal funding support. The Department of Energy, again, has already granted that $80 million. They've gotten, and that helped fund their $160 million investment there in the state of Georgia. And there's already a $5 billion clean school bus funding program. And Bluebird already has 2,000 EV buses on the road utilizing US-built battery packs. So again, Bird Corporation is definitely one of the front runners in terms of EV buses, and they continue to utilize these different government programs to make sure that they have a solid market share in this division. And last slide, this is more of a recap slide, just going over some of these numbers. I love the bar graph kind of showing that increase year over year, quarter over quarter. And you can see from a booking standpoint, they're up 3%. Revenue is up 8%. Their adjusted EBITDA is up 9%. Their adjusted EBITDA margin is up about 14%. And their EV bookings is up 64%. So all in all, they had a very strong fiscal year 24. They do have a very strong outlook for fiscal year 25. So I am looking forward to seeing what else they're able to announce, if they're able to capture this December 2024 additional government program. And I'm excited to see them start their groundbreaking there in the state of Georgia on this large facility that's going to help increase their capacity for their manufacturing plant. And with all that being said, I hope you all really enjoyed this video. If you did, consider giving it a like. Subscribe to the channel if you haven't already. Leave me a comment. Let me know your thoughts on Bluebird Corporation. What do you think they did right? Where do you think they still have room for improvement? And with all that said, I hope you all have a great rest of the day, and I'll see you on the next one.